Welcome back, traders, and then a happy new year to all of you. And this year I wish you all a profitable trade. And then I also want to encourage you that if you're having a difficulty in trading, let me say you're having up to trade difficulty like risk management, FOMO, and then early entry, or how to manage your trades. If you're having some of these psychological problems, all you have to do is to focus on solving one at a time. Okay, don't rush yourself. Don't try to solve everything all at once. Okay, it takes time. If you go to the college, it takes 4 years for you to graduate. So give yourself time and then give yourself space, and you'll see everything will fall into place. Okay, let's dive straight into this video. Today we are going to talk about order block, how to correctly trade order block, and then how to enter with a tight stop loss, therefore reducing your risk. I'm going to take this all off and then we'll start analyzing the market. Of course, as you all know, I always start my analysis. I go to the weekly time frame to see price over all direction, and then if you look from this higher time frame, after this big displacement, price has left us with an imbalance right here. I mean, after this displacement right here, pardon my drawing, after this displacement right here, this big displacement, price has left us with an imbalance, which price is definitely going to fail. And then if you look closely from this bearish engulfing candle from the weekly time frame, price has traded into a significant area, which is this imbalance. Now a lot of you might be wondering, okay, what happens to this one? Don't forget, this is on the weekly time frame, right? This is on the weekly time frame. It will take time for price to come into this place, and I'm not gonna wait all through. And then you can see the power of an imbalance or fair value gap. You see how price is reacting off this fair value gap. Now this is my point of interest right here. I'm not gonna use this one because I have no market structure shift. Okay, assuming price closed above this high, then I'll be expecting price to drop below 50% of my fib level before taking a trade. But in this case, we have an overall target, overall point of interest up here, and then you can see that price is just making some sort of retracement into this imbalance. Then I'm expecting price to take off into this zone. Maybe in the future price will come here, but if price fails to respect this point of interest, that imbalance, then the next target is definitely this imbalance. And then also I'll be looking for a trade opportunity in that zone. So this is a very big imbalance from the weekly time frame. I'm not gonna take trade just like that. I'll step down to the daily time frame and then to see if I'll have other confluences. And then of course I have an order block right here, which makes it more valid for me, and then this is how I normally take my order block. Since this is on the daily time frame, I don't highlight everything. I'm gonna take this fair value gap off. I don't highlight everything like this. I don't do this because it will make it too big for me. Okay, whenever from the 4-hour time frame and then on the daily time frame, this is how I take my order block. This is a bullish order block. So starting from the bearish candle you see here, from this candle I will use the close of this candle down to this wick. So I don't need this point because I know that price is definitely going to trade into this body. Price is definitely going to trade into that body, and then I don't want to enter this way since I know price is going to reject from that. This is how I normally trade before, but not anymore. And then the new technique I've adopted is what I'm going to share with you guys. Okay, formally all I will just do is to set my entry at the tip of that order block, then targeting this equal highs and this liquidity zone right here. Let me mark that out. this liquidity zone, and then another liquidity zone resting here, which will be my take profit one. I don't take trade that way. So what do? I'll go down to the 4-hour time frame. From the 4-hour time frame, you see that we have a fair value gap right here, which is making this zone much more interesting. Okay, so now you see this price, the momentum price is using to displace into this place. Ideally, if you always watch the chart, it's not even advisable for you to even start taking a buy position. It's very, very risky. So all you have to do is to wait for a confirmation, for an extra confirmation. I went to the hourly time frame. I still got no valid confirmation, but I was expecting a market structure shift from the 15-minute time frame. That would be my final confirmation, because price is fractal. Whatever you're expecting from the hourly time frame is already happening in the 15-minute time frame. That's why whenever I step into the chart, I just go through time frames. I get much more information from that. Now you see price try to push from this zone, but you see we have a fail sweeping this low. Another try, we have a fail sweeping this low, and then boom. Let me zoom this stuff out so you can see. Let me change the color. Now you see how price fade 3 times, pushing higher. Price fade 3 times, and then finally we have a displacement. Which is this one right here, this displacement right here, and that was what I was looking for. Now to take a trade, I'm taking my trade from this breaker block right here, taking my trade from the tip of this breaker block, and already my stop loss has been reduced from the previous entry I was talking about, and now my stop loss is here, and then my entry is here instead of this. So you see the difference. This is 106 stop loss, and this is 57 stop loss. So I've succeeded in slashing it into 2, therefore minimizing my risk. And then my targets, this is my first target, then this is my second target. I took this trade yesterday, and then I also share it with my Telegram group, which I'll be dropping the link under this video. And then to even make it much more better for me, I had price sweeping Asia low and then closing above. I'm going to turn on the indicator for Asian section, and you can see price cleared the low of Asia right here and then closed below. And then once I get a good displacement upward, and then I will be expecting price to do something like displacing up and then retesting this zone before taking off. Okay, I might decide to close from here, because already this is 1:3 from this is 1:4 already. So I might decide to close all my positions there and then leave one, or just close everything here, or hold depending on how I see the price action, or hold up to that zone. Now price might also decide to fail my analysis. That is fine. I have my my risk management in place, so whatever happens, I don't have control over that. Only thing I have control is how to manage my risk and then when to enter a trade. And you can see that price is accumulating. We're having a consolidation right here. So if price breaks above, that would be nice for me. So guys, I'm going to update you on how this trade plays out, and this is 1:7. So it's okay if I take my profit from this place or this place, but my overall target is still above, and then I'm having a double top up here, which is a resting liquidity. Now I shared this with on my Telegram, and you can see this was, you can see the write-up swing trade targets 1 and 2. Let's see how it goes. then thereabout. My friend brought my attention into this trade right here. He brought my attention into this trade, and I told him that okay, let's see how it goes. If price gives us a market structure shift from this point, then I will enter, and that is exactly what happened right here. So get a friend that has a similar trading idea, trading strategy with you, that will help much more better, because most of the times you all see the same thing in the market because you are trading the same system. Guys, I hope you enjoyed this video. Please like and subscribe to my channel. Thank you.